Hey everyone, John with TRD Trader here, coming back at you with another Set It and Forget It Sunday. Before we go over next week's plays that I'm going to make, let's go over the calls I made from last week. If you'll remember, we had a number of companies across a number of different industries with a number of different strike prices. The market's been pretty good the past week, and hopefully it's going to be pretty good next week. So a lot of my plays from last week didn't get called on. Let's go over the one that did get called on. ASO has been, even though I feel it has a lot of long-term potential, it's had a very rocky road the past couple of days. I think because of COVID, people are concerned about consumer demand, not as many people being outdoors. But I think that, ASO is going to have a solid customer base going into the future. But that being said, ASO stock price has had rocky up and downs. So I had called a strike price of 36, and the stock ended at 35.25. So this put would have gotten exercised, and you would have got forced to buy the stock at 36. But when I made the call, you would have I said you should have done it for $1.41 premium. So your actual basis is your strike price less the premium. So your basis would have been $34.50. And you still would have had a little bit over $0.50 in profit, and that works out to 2%. So even though this one play got called on, you still could have exited the position in profit come Monday morning because you'd be able to sell the stock for $35.25. Now let's go over the options that I called that didn't get called on. So all of these options I called, they expired out of the money, which means you keep the premium free and clear. You can see that the interest or the premiums, they range from 0.5% to almost 4.5% for Microvision right here. Microvision has been doing pretty good because of inflation fears. The stock price got clobbered the last couple of weeks because it's a new company. Most of those revenues are in the future, so it's projected that with higher inflation, the discounted future cash flows are going to be less with that inflation, and therefore the stock price has to come down in order to compensate for that. That being said, they had a stellar performance this past quarter, and so that kind of shot the stock up. But anyways, so I called this option. This was my best performing option play that I called on, and it got you almost a 5% return. So those are the plays from last week. Almost all of the plays expired out of the money. One play didn't, but you still could have exited it with a great deal of profit. Now let's go over the plays I'm calling for the upcoming week. Same companies for the most part: Smith & Wesson, Blink, Fubo, Gevo, Halliburton, AMAR, Marathon, MVIS, Riot 6, Tupperware, Viacom, Workhorse. The one stock you won't see here will be, what's that? EXPI. EXPI shot up really high, and so I don't feel comfortable with any of the put prices because I don't know if that stock's going to come back down, and it went up so high that I don't really feel confident calling a put on it, because basically any put I would want to call would be in this area right here, but it shot up so far that there's not really any options you can sell for a profit, so I left EXPI out for this week. But with the options that I am calling, Smith & Wesson at 12, Blink at 5, I'm sorry, those are the days. Smith & Wesson at 22.50, Blink at 31, Fubo at 25, Halliburton at 5, Gevo at 5, Halliburton at 19, Marathon at 28, Marathon at 30. And you'll see that there's options between these two. I'm comfortable with both of these options, Marathon at 28 or Marathon at 30. The difference between the two is that the 30 is going to be more profit, but it's also going to be riskier. The 28 is going to be less profit, but it's going to be less risky. Same with MVIS. I called 1350 and a 1450, so you can do 14 in between. Riot, Six Flags, Tupperware, Viacom, Workhorse. You'll see the profit for these range anywhere from 1/3% all the way up to 3.5%, Once again, Microvision being our top performer for the last couple of weeks. I mean, it's easy to be a top performer when your stock gets clobbered so far below. Of course, you're going to shoot back up, right? And you'll see that the chance of profit, it's ranging anywhere from 77% at the low, 77.3, all the way up to 94.9. As always, I get these from a third-party website. If you go to this website, Short Put Calculator, it'll give you the chance of profit on a naked put. Now, what I'm doing is covered puts, which means it's a lot less risky than naked puts. The upside's a lot less, but there's also a lot less risk. But this is the chance of profitability for a naked put. So the fact that it's a cash covered put, it would actually be more likely to be profitable. But I use this as a sanity check, so you'll see, that's pretty good chances of profitability, over 77%, and pretty good rates of return, anywhere from 1/3% to 3%, assuming none of these get exercised. So you're seeing that now that the market has bottomed out and it's starting to pick back up again, we can begin to get that 1 to 3% ratio that I talked about weeks ago. And so hopefully, the market will keep going back up and we can keep getting returns of 1 to 3%. Guys, I hope you're in the market. I hope you're at least paying attention or watching these videos. Please like, subscribe, and I'll see you guys later.